When we're talking about this pandemic, it's been interesting to note how it's impacted Americans at different economic levels, income levels differently. That was something that was stressed, a warning put out by the Federal Reserve back in March earlier this year, a plea basically for banks out there to treat those poorer customers with a little bit more empathy, asking to waive some of those fees that are traditionally charged, whether it be overdraft fees or insufficient fund fees. But we've seen, according to a new study out there, that billions in profits continue to be raked in by some of these banks, charging some of their poorest clients out there. And for more on that, we're joined by Yahoo Finance's Kristin Myers with more detail on that report. Kristin?
Hey, Zach. Yeah, compassion indeed. Congress had even gone out and told banks that they should not be collecting overdraft or insufficient fund fees, NSF fees, from clients, especially in the height of the pandemic when millions lost their job. But there's a new report out from Stilt, that is a loan company, that has found that banks raked in, I want to give you the exact number here, about $11.6 billion of fees were collected by the banks during COVID, the height of COVID, of the pandemic. So that's Q2, those 3 months there. Now, I want to kind of go through some of those fees that were collected. So banks actually charged over $4 billion in NSF fees. Again, that's that insufficient funds fees during the second quarter of this year, 2020. Banks also charged roughly $5.1 billion in overdraft fees during the second quarter. Now, just to highlight what the average fee was, it was about $30, $29.67 for the insufficient funds fee. And the overdraft fee on average was also about $30, $28.32 there. Now, when you add those insufficient fund fees and also those overdraft fees, in addition to the fees charged for ATM withdrawals and maintenance, which many of us know that we have to pay when we have bank accounts. In total, that means that banks actually pulled in during that quarter $11.6 billion in fees, Zach. Now, I want to kind of put this into context for everyone and why some people might be looking at this number and say, that just seems unconscionable. In July, the unemployment rate was 10.2%. But remember that at the height of the pandemic, that unemployment rate had skyrocketed to 14.7%. Over 40 million at the height of the pandemic actually had to end up filing for unemployment. I do want to, however, highlight here that, again, Congress, the Fed had implored and really urged banks to really waive a lot of those fees. Some banks did go out and waive those overdraft fees. They did waive those insufficient fund fees. Each bank took a different kind of token with this virus to help their consumers. So there was actually a decline during the second quarter. These fees do not necessarily represent an uptick from the previous year. So just to give that context here, there was a decline from 2019 to the second quarter of 2020. So for overdraft fees, that was a drop of about 77%. Again, that's on the same averages from the year prior. And during the second quarter of 2020, insufficient fund fees per customer dropped about 9%, again, compared to the same quarter in 2019. But again, still, Zach, I mean, roughly, if you're going to do the math here, about $9 billion in just insufficient funds and overdraft fees seems a little bit harsh, especially as people were out there struggling due to the coronavirus pandemic.
No doubt. And Kristin Myers, appreciate that data-driven look into what's going on the banking front. Clearly, a lot of Americans dealing with quite a bit during this pandemic don't need an additional fee on top of it.